Hello and welcome to this session in which we will discuss the third component of internal control, which is control activities. In the prior session, we looked at the first component of internal control, which is the control environment. Then we looked at risk assessment. And in this session, we would look at the third component, which is control activities. And control activities is part of the internal control. Remember when I spoke about the internal control, I told you, consider this fort as the internal control. And the internal control is composed of 5 components: control environment, risk assessment, control activities 3, information and communication, and monitoring. In this session, we'll focus specifically on control activities. Now, control activities are important. When I say they are important, I don't mean to imply that control environment and risk assessment are not. The reason why control activities are important because you will see them again and again in the various cycles. Before we proceed any further, I have a public announcement about my company, FarhatLectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. So what are control activities? Control activities, again, are policies, procedures, protocols that guide the company in managing and mitigating any risk that could prevent the company from achieving its goal. So the reason is to mitigate risks. And those are activities, policies, procedures. And they can involve many types of activities, and they are applicable to the various cycles. In other words, we have the sales cycle. They will have their own control activities. We have the purchase cycle. They have their own control activities. We have the payroll cycles. They have their own control activities. We have the inventory cycle, so on and so forth. Some of these activities are manual. Some of these activities are automated. In other words, they are computer-based. Let me just give you a quick example, very simple example. For example, any return is not accepted unless we have the manager's approval. Well, this is a policy. This is a manual policy. I'm sure you notice at some companies, when you make a return, the manager will have to be there to approve that return. That's a manual activity, manual control activity. An automated control activity will be, don't sell to this customer once their credit limits reach a certain amount. So, for example, once you go above $10,000 in credit limit, the system automatically would refuse to approve your sale for you. So this is not a manual system, this is a computerized system. And we have many. We have manual and we have computerized. And don't worry, we're going to have plenty of recording explaining computerized internal control. However, internal controls can be broken into 5 broad categories. In this session, I'm going to give you a small taste of these categories. However, these categories will appear again and again in various cycles that apply to different accounts. The first one is something called segregation of duties or segregation of responsibilities. They're known as SODs or SODs. There are 4 types of segregation of duties. I will cover them briefly in this session and in much more details as we cover each cycle separately. 2. Appropriate approval or appropriate authorization of operations and tasks. Simply put, you cannot carry out an operation unless you have the proper approval. 3. Comprehensive or adequate documentation and record keeping. Part of your internal control activities, we have to have evidence so we can go back and see exactly what happened. Well, part of it is having proper documentation, whether that document is manual or computerized, and we'll talk about both. Physical control over asset. Well, are you protecting your assets? Do you have policies and procedures that's going to physically protect your asset? And those assets could be tangibles and they could be intangibles. And the last control activity that's very important, they're all important, is independent audit of performance. Simply put, level 5 or control activity 5, basically you want to go back and review all the activities that you perform in prior steps. Make sure it's working. You are auditing those activities. Starting with the first segregation of duties, which is the first SOD, it's the separation of asset from custody. So you are separating two things, the assets, any assets, and the custody of the asset. So for safeguarding business asset against embezzlement, asset custodians should not be handled the related accounting. Well, simply put, I have two pictures of you here. I have the assets, which is cash. It could be any asset, and a person, accountant, responsible for that cash. The accountant people should not be able to touch the cash. The custody and the record keeping, they should be two separate assets. Separation of the custody of assets from accounting. They cannot handle that. Although, when you think in your mind, you think accounting people are in charge of money. Not at all. You don't want the accounting people to be in charge of the money. You want them to keep track of it in terms of accounting record, but not touch it. We have a separate people, treasurer, that handles that, but not the accounting, because they keep records. So combining these two roles escalate the risk of misappropriation, which is the theft and record manipulation. So if a cashier is also handling cash receipts data, they could embezzle the cash and change the record to cover their misconduct. So the company cashier, the cashier is in charge of the cash, but the cashier is different than the accountant. The accountant is in charge of record keeping. You don't let the cashier change the record as well. The second SOD, segregation of duties, separation of authorization from custody. Again, authorization and custody, they should be separate. To lessen the chance of embezzlement, it's recommended to separate transaction authorization from asset control. Well, if you have the authority to move the asset around, well, you should not have access to the asset. Okay? For instance, the individual approving a supplier's invoice should not also be responsible for approving the fund disbursement to settle that invoice. Because if you can approve it, and approve the funding, well, what can you do? All you have to do is receive the asset, and no one would know about anything. Okay? And especially if you can receive the asset as well. Now, these segregation of duties are in large companies because they have enough people, enough resources to separate. So here what we're separating is the authorization from the custody. 3, the third segregation of duties is operational responsibility and record keeping. Record keeping is basically, we're going back to accounting. In other words, if you are in charge of operating the business, if you're in the operation, you should not have accounting or record keeping capability. To be impartial, record keeping is often assigned to a distinct department under the controller's supervision, which is accounting. For instance, a department handling its own record creation and reporting may be tempted to alter the outcome to present a more favorable performance. Simply put, operation, if this is operation, they're working in the company, somebody else should keep track of that, separate people. 3, now this is IT. Again, separation of IT duties from user departments. Here we're going to cover it only from segregation of duties, but we have many sessions about IT security, IT internal control, segregation of duties, but this is the fourth type of segregation of duties. Okay? As IT systems grow more complex, the line between authorization, record keeping, and custody can blur, because now the system can do all three at the same time if you'd like it to do so. It's not recommended, but it can. For instance, a sales agent might input customer order online with a computer system authorizing and recording the transaction. So notice, one person, just the customer or the agent, can put the information online, and the computer would approve the sale based on that individual credit and history, and would record the transaction. Therefore, to prevent overlap, it's crucial to separate key IT functions from the main operational roles. What does that mean? For example, the IT department should manage the design and control of accounting software. That's the IT people, the programmers, while the company credit department, separate from IT, should handle update to customer credit limits. So one group, which is the IT people, makes the program, but they cannot change specific input, specific customer data. They put the rules. Now, the credit department, they would handle the credit limit, but they cannot change the program to do something that you don't want the program to do. For example, approve a customer that don't have a good credit. Simply put, the people that use the IT system should be different than the people that program it. Because if you can program it and use it, you can make it do override things. Same thing, if you are the user and you can change the programming, you can make it approve certain transactions that, giving normal circumstances, will not be approved. So those are the 4 segregation of duties, which is the first and very important control activity, segregation of duties. The second control activity is the proper authorization of transaction, proper authority. Okay? Effective controls require every transaction to be suitably authorized. Without this, unrestricted asset acquisition or expenditure could lead to chaos. What does that mean? Simply put, when we want to buy something, we have to have someone's approval. Why? Because otherwise people will be buying stuff all the time. We're spending money. Now, authorization can be general or can be specific. In general authorization, management set policies and subordinate approved transaction within policy defined limit. Here, for example, we would say up to 5,000 lower level management or employees can make the purchase. Anything above, then we need more authorization. So these are general authorization. This include issuing fixed price list for product sales, setting customer credit limit. For example, you can sell to up to a point, or establishing reorder points for purchases. Basically, once our inventory falls below a certain number, anyone from management can reorder. General authorization. Specific authorization relate to individual operation. In some cases, management opt to approve each transaction separately. Here we're talking about, usually it happens when you have a large or important amount. Okay, for instance, a sales manager in a used car company might need individually authorize each sales deal. So you don't let the people making the sale authorize it, you need a manager. So this is what we talk about authorization. We have specific one and we have general one. Now we have to differentiate also between authorization and approval. Okay, authorization refers to a policy decision for either a category or individual transaction. That's fine. That's given the authority or not. Approval, on the other hand, is the execution of the authorization. For instance, for example, management might authorize the purchase of inventory when supplies fall below a 3-week threshold. This is they're giving the authority to do it. When the inventory is ordered, the record-keeping clerk approves it. Okay, now it doesn't have to be a record-keeping. This could be a computerized system. So the approval is in adherence to the authorization of the overall company policy. As I mentioned, alternatively, a computer might approve the transaction. The computer can read that we fell below a certain number of inventory by comparing the inventory level with a predefined reorder point that's already been authorized, and auto-generate purchase order from approved supplier in its database. In such cases, the computer performs the approval function using a pre-authorization data in its master file that's most likely input. Not most likely, it's input by top management. The third control activity, as I mentioned, is adequate documents and documentation. This is the evidence. This is the evidence behind the accounting system. And if we want to have control of the company, we should be able to go back at any time and see all the evidence, all the record. Okay, documents and records, which may include sales invoice, purchase order, subsidiary record, sales journal, employee time report, form the basis for record keeping and summarizing transaction. That's the evidence. Now, many of these records these days are electronic. That's fine. We need to also keep track of that. We'll have a separate recording for IT. So proper documentation is crucial for accurate transaction recording and asset control, because we should be able to go back, look at the documents in order to verify our figures. So when the receiving department fills an electronic receiving report, the accounts payable application can cross-check the vendor's invoice detail with the report, addressing any discrepancies through the accounts payable department. So when we receive the item, we input the item into the system. That item is cross-referenced electronically with the accounts payable, making sure what we received is what they're billing us for, which is a great documentation. Some documentation principles include using pre-number sequence for documents and records, aiding in tracking and ensuring completeness. This concept, pre-numbered sequencing, you will hear it again and again in different cycles. It's a very important internal control measure. Pre-number document. You can pre-number them, and this way you can add them at the end. If there's anything missing, you will be aware of it to ensure completeness. Creating record when a transaction occur as soon as possible to reduce time errors. When a transaction occur, and now electronically it happens immediately, almost immediately, because the accounting system would record the transaction, would capture the transaction. Where possible, design document for multiple purposes to minimize form variety. For example, the sales order should be matching with the purchase order should be matching with the receiving report. But we'll talk about this later on, where you have the same document for multiple purposes. Okay, a well-structured electronic shipping record could be used for multiple tasks, releasing the goods, informing billing, and updating inventory. One form, it has all this information, multiple tasks, and if it's most of the time computerized, computer system can do that. You have to prepare document in a way that promote accurate preparation, such as using internal checks, screen prompt for critical information during online data entry. So when we're talking about online, for example, when you're filling a form online, you cannot submit the form until it's complete. It's basically an internal check. This is what internal checks are. For example, if you're putting a zip code, okay, the zip code will have to have five numbers. It won't let you proceed unless you put those 5 numbers. The screen will prompt you. It will tell you something's not right. And this is how you want to fill out the forms. Okay. Invalid inputs can be automatically rejected based on existing data, ensuring accuracy. And we have a whole session about input control on a computer system. The fourth, again, I keep saying we're going to talk about it later because those are general principles. You're going to see specific steps in each cycle. And in IT, we're going to have specific sessions for the IT. Actually, we already have them in the course. Physical control over assets and record. This is the fourth control activity. This is to ensure that we have strong internal control. We want to make sure we safeguard both assets and the records itself. You know why? Because unprotected asset can be stolen, and an inadequately guarded record can be lost, damaged, or altered, or stolen for that matter, causing significant business disruption. Now, in a highly digitized company, which is most companies are, protection of computer equipment, software, and data files is critical as they could be challenging to restore. Again, we'll have a whole session about this, but those are very broad principles. So we have physical precaution are a key protective measures. We want to physically protect our assets. Secure storeroom for inventory, help prevent theft, especially when overseen by reliable employees. Also, fireproof safes, safety deposit vault, safeguard assets like cash and securities, while offsite backup protect computer software and data files. Again, there's a lot to talk about backup planning. And the fifth control activity, that's the most important, is independent checks on performance. This is the final category, and it involves diligent and ongoing reviews of the previous 4 categories. Yes, you have the 4 categories set up, you're following them, but you want to go back and on a regular basis and independently check, send internal audit people to make sure we are following the 4 control activities. There are necessary as internal control can morph over time, can be reduced over time without regular assessment. You know, people changes, technology changes. You want to go back on a regular basis and check to make sure your internal control, your control activities are working as you expect. See, because employee might neglect or purposely bypass procedures or become negligent unless their work is monitored and reviewed. And that's why you want to go back and do that on a regular basis. Even with strong internal control, there's always a risk of human errors or fraudulent activities. Therefore, independent checks is a must as part of your controlled activities. So, personnel responsible for performing internal verification must be independent of those originally responsible for preparing the data. And this is part of the segregation of duties. People that check on you should not be the people that are performing the tasks. So you don't tell the people who are performing the tasks to check on themselves. And this is part of the SOD, segregation of duties. The least expensive mean of internal verification is the separation of duties in the manner previously discussed. For example, when the bank reconciliation is done, as an example, a person independent of accounting record and handling cash should perform it. There's an opportunity for verification without incurring significant additional cost. So you don't let the accounting people do it, because accounting people, they already inputted the numbers, and you don't want the people that handle the cash because they handle the cash. You bring even a third person to do this independent check, and that person could be anyone. That person could be anyone from another department. Now remember, we have IT dominant activities. Many accounting systems utilize technology to automate internal verification process. Okay, so a system may hold vendor invoice payment if there's no matching purchase order and there's no receiving report. So IT system is very, very important for us because it performs all these verifications. So if there's we did not receive a product, we cannot have an accounts payable unless we have a receiving report that matches a purchase order so we can create an AP. Given the significant dependency on technology for these activities, there are risks associated with IT service, security, and functionality that needs an enterprise level management. And again, we'll talk about those later on. Just I want you to know that we have IT controls that's going to be handled separately. Organizations implement IT general controls to mitigate these risks as discussed in separate sessions, many separate sessions. We have general controls, we have input controls, we have application controls, we have all sorts of IT controls. Now in this session what we did is we covered control activities, which was the third component of the internal control, which is what I told you. The internal control is this fourth, and it's composed of 5 components. We already discussed 3: control environment, risk assessment, control activities in this session. In the next session, I will combine both information and communication and monitoring. Understanding the internal control 5 component is critical to your success, whether you are an accounting student, a CPA exam candidate. Remember, there are 5 components: control environment, risk assessment, control activities, information and communication, and monitoring. This is the COSO framework. Study hard, invest in yourself, accounting is worth it, and stay safe.